Coming up on Market to Market, more than a foot of rain falls on the Midwest, creating havoc in two major watersheds. A pipeline carrying carbon gets the green light. And commodity market analysis with Ted Seifried next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because a pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, June 28th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. While Supreme Court rulings and presidential debates dominated the news cycles, the economic train kept chugging with inflation still the driver. The government's preferred gauge of inflation, the PCE, was unchanged last month. The index year over year was up 2.6%. New home sales fell 11.3% in May on signed contracts to build. This was the steepest drop since September of 2022. Durable goods orders added a fourth month of gains but extended the weaker pace of growth. May recorded only 0.1% increase. Aircraft, computer equipment, and motor vehicles were the leaders in the sector. Drought has extended its grip on the eastern U.S. and the regions south of the Great Lakes. More than 45% of the country is in some form of drought, up almost 20 points in the month of June. Conversely, rain keeps falling in regions used to storms bringing a foot of snow, not rainfall. The flood-swollen Blue Earth River near Mankato, Minnesota, was one of the most visual reminders of water's power. A dam broke here Monday in the south-central community in the land of 10,000 lakes.
It really was more of a partial failure of the west abutment as the water continued to run around the west side of the dam, and it's resulted in additional erosion and slope cutting. As you can see, we lost the Xcel Energy power substation, as well as a large park storage building and materials that were stored in there.
More than a foot of rain fell into tributaries that feed the river, which led to catastrophic flooding. Late Tuesday, the torrent finally swept away a house next to the river, where rushing water cut into the bank, eroding the ground underneath the home.
The flows peaked yesterday at 34,800 cubic feet per second. Currently, they're flowing at 33,000 cubic feet per second. With that being said, that makes this the second largest flood ever of record at the Rapidan Dam. The previous second largest flood of a record happened in 2019 that caused significant damage to the dam.
The Blue Earth flows into the Minnesota River and eventually to the Mississippi River. Flood warnings are in place downstream as far as St. Louis. South Dakota was also one of the regions receiving copious amounts of precipitation. Sioux Falls recorded 18 inches of rain in the end of last week, according to the National Weather Service. This railroad bridge in North Sioux City, South Dakota, pushed back against the high-pressure water flow before eventually collapsing. Officials with the BNSF Railroad said they are rerouting trains to avoid flooded areas. The new pathways add hundreds of miles to each trip. These images from farther south in Woodbury County, Iowa, show fast-moving current carrying field stubble and other debris downstream into the Missouri River. The farm fields here are swamped, with only time to offer relief. Flood warnings along the Missouri are in place downstream to Kansas City. Kelly Neuenhaus, a farmer in northwest Iowa, says this year's crop has already received almost an entire annual amount of rain, and it's only late June, a stark contrast to the last couple of years.
We go from extreme drought to extreme flooding in a 12-month period. And so it's definitely interesting. You know, talking about 2011, I remember that because Interstate 29 was closed because of flooding. And then 2012, we had one of the worst droughts in the country ever. So, you know, tides can change in a hurry.
The area Neuenhaus farms is well known for its contribution to making Iowa the top corn state. As quickly as the water came up, it receded. However, some damage has already been done.
Well, right here where we're standing, this is the largest producing corn district in the U.S. And so we've got acres that are hurt, and we've got even the acres that aren't droughted out. The fringe acres around there are going to be struggling. So they're stressing the yield drop is happening. So we definitely have a yield loss for the 2024 crop right now.
Downstream from the heavy rains, rivers like the Des Moines, which flows eventually into the Mississippi, were rising midweek, and communities were already experiencing high water and preparing for near-record flooding. More farm fields, some already behind because of extended spring rains, were ponding and flooding along the river's edge. All of these same communities that are dealing with high water are also being blasted with near triple-digit temperatures. The forecast for the weekend is to stay in an active weather pattern with a chance for more severe weather. The Midwest Carbon Express, if completed, is expected to cost $5.5 billion and create a network of pipelines covering 2,500 miles. Those pipelines will carry liquefied CO2 under pressure that is a byproduct of ethanol production from 57 plants in Iowa, Minnesota, Nebraska, North Dakota, and South Dakota. The liquefied CO2 will end up in an underground storage facility in North Dakota. This week, a major hurdle was cleared, as David Miller reports.
Summit Carbon Solutions wants to take and forever control our land for their private...
A milestone was reached this week in the 2.5-year battle over the construction of Summit Carbon Solutions' CO2 pipeline. The Iowa Utilities Board granted the Ames, Iowa-based company the right to use eminent domain in the siting and construction of its Midwest Carbon Express pipeline in the Hawkeye State. Lee Blank is Summit's CEO.
They took a great deal of time being diligent around the project and around the hearings for the project, which is why it took some time. Again, a lot of stakeholders that are affected here, a lot of individuals affected through this project. So the fact that the IUB took the time to hear as many and most as they could, I think was really, really a good judgment on their part to hear from all the stakeholders. So glad that it's here.
Blank says that the use of eminent domain is their last resort.
We have signed approximately 75% of the route voluntarily. Again, we're not going to be under construction for at least a year. So ultimately, our goal is to continue to engage with landowners on a voluntary basis and continue to work in that environment without attempting to use that last tool in our toolbox. The hope is, and the focus of our company is to be transparent, open, and honest, and try and find voluntary arrangements with those that we would be affecting.
The decision was handed down after a comment period in late 2022 and a contentious hearing that took place over 4 months last year. Emma Schmidt works for the Bold Alliance and is director of the Pipeline Fighters, a group of farmers, landowners, and their neighbors that object to construction of the pipeline.
I don't think anybody's surprised by the decision. I think we've been prepared and working towards this decision for years now because we've known it's a bit of a kangaroo court going on. But I think we are really set up to progress forward and actually win and stop the pipeline.
Schmidt says the group, along with the Sierra Club, plans to appeal the IUB's decision.
Really, what it comes down to is that this does not promote the public convenience and necessity. That is kind of the legal standard that they have to meet, and they don't. This provides no benefit to anyone except for, a few boys in their Wall Street offices and a few out-of-state and out-of-country investors.
Despite the green light in Iowa, Summit must meet several legal benchmarks before it can leave the starting line. According to the IUB's decision, construction permits must be secured in Nebraska, Minnesota, and the Dakotas, as well as obtaining a permit to build the sequestration facility in North Dakota before work can begin.
It'll always be a bit litigious around the project. So I think the landscape is just going to be one of flux that we'll have to continue to deal with. We don't anticipate it affecting the results, the end result of the project. We don't see anything on the legal landscape that would do that, but we do anticipate challenges. We think that will happen.
For Market to Market, I'm David Miller.
Next, the Market to Market report.
Not only was Friday the end of the month and the quarter, two major government reports influenced much of the trade. For the week, the nearby wheat contract lost 2 cents, and the September corn contract fell 33 cents. USDA reported more soybean acres despite 12.8 million acres left to be planted. The August soybean contract shed 14 cents, while August meal declined $2.70 per ton. December cotton expanded by 38 cents per hundredweight. Over in the dairy parlor, August Class 3 milk futures weakened 56 cents. The livestock market was higher. August cattle added $2.28. August feeders put on 92 cents. And the August lean hog contract found 17 cents. In the currency markets, U.S. dollar index increased 5 ticks. August crude oil expanded 98 cents per barrel. COMEX gold gained $5.40 per ounce. And the Goldman Sachs Commodity Index was down more than 3 points to settle at 577.65. Joining us now, regular market analyst Ted Seifert. Hi, Ted.
Hey, Paul.
So, anything going on today?
It's Friday, but yes, we had one of the biggest reports of the year today, Paul, so.
We will hear about that. We'll call that a tease because the wheat market didn't really have, this wasn't really a report for the wheat market necessarily, but was it impacted?
So the interesting thing about wheat is that this quarterly grain stocks number is what is effectively our ending stocks number for old crop. But as far as acreage is concerned, no big surprise there. It came out pretty close to expectations, pretty close to the intentions number. So yeah, we're very early in the new crop marketing year, so this is not as big of a report for wheat as it is for the row crops, say. It was still kind of a bit of a bearish report. Above a 700 billion bushel old crop carryover, new crop carry-in is a bit of a bearish report.
And when you look at that chart that was just on the screen, I mean, we were down at one point, I think, 17 and 19 days this week.
Yeah.
Do you see, is that a dead cat bounce right now?
Wow, yeah, Paul, we had gotten to intraday, we had gotten to 18% on a relative strength index. Daily, we had gotten down to 22% on a relative strength index. I mean, it's just been an epic decline, like you said, down, what did we have, like 12 days straight? And finally, we had a bit of a bounce. Technically, we needed it. I don't know if there's much upside potential for wheat. We've had the Russian, weather issues, but they've been revising their crops higher now. That's all been absorbed. Like, I don't know. I think it really kind of depends on I think wheat will follow row crops if they go higher, but I'm not sure about that either.
Let's go to row crops for a minute. Corn. To me and to other analysts, bearish surprise on acres. Is that the lead story for you in this report?
Yeah, Paul, everybody wants to talk about acres because that's the number that we can all have, right? Anybody can make a guess on acreage numbers. Quarterly grain stocks is a much more difficult number to come up with. You have to put a lot of math behind it. I mean, you're looking at 3 months of disappearance, 3 months of demand, and trying to figure that out. So yeah, acreage was a bearish number. I mean, we came out, for all intents and purposes, 1.3 million higher than what the trade was expecting. It was a very contested number going into this report because on one hand you had a sloppy planting season. You know, you had prevent plant in some areas. You know, so were we going to lose some acres of corn? Versus, okay, when we saw planting intentions, it was, you know, 6.2 million acres less than last year in principal acreage. And even the smaller crops were losing acreage. So there was a whole lot of acres that, where'd they go? And we didn't put up that many strip malls and subdivisions in that amount of time. So we had a feeling that there were acres that could come back if we had a really nice planting window, but we didn't. So then it was really a question mark. End of the day, we gained acres. Okay, that doesn't really help the weather market ideas, right? I mean, we've had some weather issues that we've wanted to be bullish about. Market has not responded, and now we know why, because we have that acreage cushion. And we have the quarterly grain stocks that came out 135 million bushels over expectations. That is very significant. Some of that will find its way onto the old crop balance sheet, into the new crop beginning stocks. So when you look at new crop beginning stocks going higher and bigger acres, that leaves us a lot more room for error as far as the national average yield is concerned.
And that becomes then a weight we have to bear for the foreseeable future.
Well, the biggest problem that I see in corn right now is that on-farm storage is up 37% year over year, right? That means there's a lot of guys that are holding on to corn, looking for the summer rally that we've had for the last 3 years in order to sell that corn. But that corn's going to have to move one way or another, or at least a good portion of it's going to have to move before the new crop comes in. And if we don't get the summer rally to sell, you're going to see a whole lot of pressure in August on corn as guys are throwing in the towel. So that on-farm storage number is the biggest concern that I have for corn. I think the savvy traders have known that for a while. I think that's why we haven't really responded to a weather issue. The market generally draws out bushels with the stick rather than the carrot. I mean, lower prices bring out more bushels than higher prices. It's just how it is, and it's unfortunate, but that's how that works.
So you're contributing to maybe the whole reason the funds were as short as they were. They knew something, maybe.
I think they just trade charts and trade momentum, and there's just not been a good catalyst for corn to really go higher. I mean, I want to speak positively on corn demand. I think corn demand's solid, but we have a big supply.
Let's try to get you positive. Jamie in Iowa wants to know, Ted, with all the crops being flooded in the Midwest and the Eastern Corn Belt praying for rain, is there going to be a rally? And I'll amend this to say any chance for a rally and what causes it?
Well, hi, Jamie in Iowa. This report today, I think it had the potential to spark a weather rally. If we had to come in at 88 million acres for corn, that's a lot less that's a lot less cushion for any sort of problems with our national average yield. I was really kind of hoping we'd see that, to be honest, Paul. But that was not the case. Now that we have more acres than expected, and go back to last year where we had some really tough conditions. I mean, in a lot of places it was as bad as, or likened to 2012, and we still ended up with a 177.3 national average yield. It's going to be tough. It's going to be really tough at this point, Paul, to get excited about weather and corn. Now, I do think corn demand is fairly solid. So, maybe that keeps a bit of a floor underneath us. Corn is now very oversold, just like wheat was. So I wouldn't be surprised if we have just put in our sort of seasonal low for corn. I would like to see a bit of a recovery from here. But I don't know. I don't have anything. I can't do jumping jacks about $6 corn, Paul. I just can't.
Can you do jumping jacks on 1133 August beans?
There's been a very strange thing happening with soybean spreads, old crop, new crop, either July versus November or August versus November. We've had a very large inverse, which is not typical in a bear market, which is not typical in a projected 350 million bushel carryover. So it's been kind of tough to explain that. And quarterly grain stocks for soybeans, I thought that was going to be the most interesting number on this report, because it would have gone a long way to explaining the relative strength that we have in old crop beans if that quarterly grain stocks number came in well below expectations. But it didn't. It actually came in above expectations. Just like we talked about on-farm storage for corn, On-farm storage for beans is up 44% from last year. We've got a whole lot of bushels of beans sitting on farm right now. So the tightness that we have in the cash market is artificial. It's guys waiting to sell. They want to see $13 beans to sell. It's happened in recent years. We've had that midsummer rally to sell. They're waiting. They're hoping for that. If it doesn't happen, though, even worse than corn, you're going to have a whole lot of beans coming to town right before harvest, just because we have to make room for the incoming harvest. You've got a potential train wreck waiting to happen for beans towards the end of the year if we don't get a weather issue later on. The bigger problem, too, is that we just don't have the demand that we would be normally used to seeing at this time of year. We have virtually nothing on the books for China for new crop. We've got some unknown destination sales, but new crop soybean sales as a whole are down. I mean, it's the lowest level in like 10 years. It's really concerning that there is just no interest in soybeans at this level, and you really fear that new crop beans are going to have to take 20 cents off to try to find that buying interest. If that doesn't happen there, just 20 cents, 20 cents, 20 cents, 20, until we get that export business. Because right now, the new crop soybean demand from a export perspective looks really concerning.
You're talking, we'll get into it in plus, but I mean, you're talking well below 11. I almost hear you say well below 10.
My current target's 1080.
Okay, all right, we'll get to that in a minute. In livestock, was this a better day for livestock?
You know, I mean, any time that you have the potential for more corn bushels, whether it's we found an extra 135 million bushels in quarterly grain stocks and we ended up with over 1 million acres more than what we were expecting, well, that is really nice news for guys feeding corn. So, yeah, no, I think the big winner from these reports were cattle, the cattle guys. Yeah, no, that's good news. Not only that, I mean, we're headed into we are headed into our peak demand weekend of the year in the form of 4th of July. The question that I have, though, is are packers going to continue to be aggressive once we get past that? What's our domestic demand look like in the summer doldrum, beyond 4th of July until we get to Labor Day? I think we could potentially see a bit of a pullback, but in the meantime, August live cattle posted the highest trade we've seen since October 12th. So we are back to some really good levels again. And we do have, it's an old story, Paul. We've been talking about it for a long time, but we do have a bit of a tightness as far as animals are concerned with supply. So there's reasons to have cattle trading at these higher levels. I don't see a big break, but I do think that we could see a summer doldrums pullback.
Looks like the hog industry's already kind of had their pullback.
Oh, yeah.
Or is there more opportunity to fall here?
Man, you put a hog chart next to a wheat chart and you say, wow, there's a lot of similarities there. And a lot of that's because of fund liquidation, right? And they had gotten very long and now, they pretty much bailed on their entire long position. I'd like to say there's upside potential in hogs. I'd at least like to say that I don't think there's a whole lot of downside potential from here. The sort of volatility that we've seen in the last week or so in hogs, I think is indicative of a bottoming sort of activity. I think there is chance for a recovery. Do we need to go back and make new contract highs? I don't see that. We have a lot of weight up front, which means there's a lot of upfront product. But again, I think we've come down a little bit further than what I would call fair value.
Well, we had this week hog inventory up 1%, lower farrowings projected. Herd grew over the last year, but further expansion is a question mark. Do you agree with that sentiment?
I mean, when you have a chart that looks like a falling knife, yeah, expansion is a question mark. Okay, so that was a bit of a bearish report, but it was expected to be bearish. I think that now that we've gotten that out of the way, we can start looking towards the future. And the concerns about the replacements, I think, could give us a little bit of support, right? I do think that we have to chew through, pun intended, the upfront supply that we have.
All right.
But further down the line, I see potential for higher prices.
All right, thanks, Ted. Appreciate it. We're going to pause this analysis, continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. Since you watched this program, we have a recommendation for you. Our MTOM podcast, Season 9, debuted last week as we continue our conversations with those in and around agriculture, weather, and energy. Sound familiar? Subscribe today wherever you get your podcasts. Next week, we'll have an in-depth discussion on the economy on and off the farm. Thanks for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.